Thank you for watching this very brief video, which will give you some, I hope, valuable information on rate increases that apply to long-term care insurance policies. What do others do when their rates are increased? Maybe that can give you a little bit of guidance. My name is Jesse Sloan. I'm director of the American Association for Long-Term Care Insurance. For 25 years, we've been advocates supporting this important protection for consumers and also supporting insurance professionals who market the complete range of long-term care solutions. I have a favor to ask. If you get value from watching this video, would you please give it a thumbs up on YouTube, a like button? That tells other consumers that that's something they should watch, and I'd be grateful. So this is May of 2022, and the association just released some industry data that I think will help you. This is what policyholders do when they're experiencing or facing a rate increase. And I'll give you a little bit of explanation of what you should think about and how it might apply to you. So more than half, 50 to 60%, and the reason that it's a range is no two rate increases are alike, no two companies do the same thing. So we thought it was most helpful for consumers to give a range of numbers. So between 50 and 60% pay the premium increase. They have chosen to keep the original policy provisions. Why do they do this? Nobody likes to pay more for anything. But clearly, you bought this policy years ago. You're now older. You're seeing other people who are aging and have a closer proximity to the age when you or they are going to need long-term care benefits. And so these folks realize the importance of what they bought. Secondly, there's no way that you could get, even after the rate increase, any coverage that would be anywhere close to the price that you will pay with the rate increase. We've studied this ad nauseum. And lastly, perhaps more importantly, you very likely wouldn't even be able to health qualify for a new policy. Insurers are much more stringent about who they will accept. So people, after analyzing the risk that they're going to need this care, seeing others who are going to need this type of care, they've made the decision to keep the policy with the original policy provisions. Now, about 25%, actually about 1 in 4, accept an offer from the insurance company that maintains or perhaps even lowers the premium amount that they're going to pay. Basically, the insurance companies will offer you one or more different options. Typically, they'll look and they'll say, listen, you bought your policy and it had a 5% compound growth factor, which meant that the benefits increased 5% compounded every year. Maybe you want to reduce that. I've seen it reduced to 3%, 2%, 2.8%, etc. And by doing that, you're able to maintain the current premium that you're paying. In some cases, you might even be able to lower it. Some people reduce multiple factors, and thus they get either a lower premium or the same premium, and they find that acceptable. And really what you need to do is review your plan coverage. It's just like reviewing your stock portfolio. The stock market goes up, the stock market goes down, your personal financial situation goes up, it goes down. Long-term care insurance should never be a one and done proposition. If it's been years since you bought the policy, talk to the insurance company, see what the current benefits are, and figure out what makes the most sense. And lastly, 10 to 20% today, and this used to be much lower. It used to be about 1%, 2% of policyholders elect the non-forfeiture option. That basically means they agree, we're going to pay nothing more. Our insurance is more or less paid up. And what you get in exchange is your benefits are typically equal to the amount of dollars that you've paid in. Now, you look and you say, well, why are more people taking this than they did in years past? There are a couple of reasons. One, it's a tougher economy. Two, I think more people are starting to realize and they're analyzing their policy. So they look and they go, you know what? Maybe I have $150,000, $200,000 of benefits that are already paid for. And if I don't pay another penny in premium, that's my potential benefit pool that would be available to me. Maybe it's $30,000, $40,000. And they look and they go, you know what? My financial situation is now much better than it's been years ago. My house is doubled, tripled in value. And so, I want some insurance, but I don't maybe need as much as I thought. So they're taking the non-forfeiture option. They're telling the insurance company, I agree, I'm not going to pay any more, but I'm going to have available to me the benefits that you've declared. Now, I want to tell you that no one decision is ever better, right, wrong. These are very, very personal decisions that you need to make. So my advice to you is sit down, read carefully what the insurance company is sending you. Typically, you can call them and speak to them and get their information, and they won't give you advice, but they'll tell you what your policy is now worth and what your options are. And then you're going to make more educated decision. Now, lastly, people often call the association or others looking to get, to compare and see if I can't get new insurance coverage that's going to be better than what I would pay with the rate increase. I'm going to tell you, if you've had your policy for 2, 3, 4, 5 years or longer, you are never today going to find cheaper coverage for the same benefits that you currently have. It's just not the way it works. You're older, your premiums are going to go up. And most importantly, the insurance companies are far more restrictive today on who they will offer coverage to. So you have to make a decision based on what you have, not comparing it to what you might find in the marketplace today. But if you've watched this and you're just starting the process of looking for long-term care insurance, then it definitely pays to work with an independent specialist who can educate you, and they can compare and they can tell you which companies have had more severe rate increases, which haven't, etc. You can get to them in one of two ways. You can either call the association number that's on your screen now, or you can visit our website, www.aaltci.org. And once again, if you got value from this video before it ends, would you kindly click the thumbs up? We'd be most appreciative. I hope you found this presentation of value, and I wish you a good day.